friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show, where we look at what happened in the market today and see if it can help us to have a better trade plan for the next day. So we had a big market fall for the third day. So in 3 days we lost 3%, and then by the end of the day we had an end with the bounce. So without wasting time, let's get into the pre-market analysis for Jan 21, Friday tomorrow, 2022. Now the candlestick patterns, no price action small. So these are all the parameters that you see on the left side that we conclude to a market view based on all of these parameters, right? They're all indicators based on the price, right? We also look at the price actions and support and resistance also. In addition to that, we also do the opportunity analysis and volatility analysis and institutional participation. So all the data analysis also is part of the what you see on the left side, on the right side. Basically, we would have some actionables also, which could turn to work on the next day, right? So let's get into the price action and see. Look at the price action. Now we have three wide range bearish candles that you see on Nifty. While BANKNIFTY is for the last 3 days is showing a red, but the bodies are small except for today. It's bearish, but not that. Basically, we lost more than 3% of just 3 days, 1% each. 1%, 1%, 1%. But BANKNIFTY it's half percent, nearly, approximately. I'm saying that's how the fall was. 1% each day on Nifty and half percent each on BANKNIFTY. So BANKNIFTY is less bearish, obviously. Looks like very planned selling. How can it be always exactly 1% every day? How can it always be exactly half percent every day? I'm just kidding. So that's how the price action is saying. 181 points lost today, and it's totaling to 3.25 in 3 days, right? The main thing is it took a moving average support bounce, like you see in the Bollinger. This is the moving average 20. BANKNIFTY it's okay. It is not. It's a little away from there, but BANKNIFTY it fall down and took the support and then bounce. It broke that and then bounce. And you can see that the bend has happened on the bands, which indicates the slowdown of the bullishness. That's all. Still can't say it's bearish because from the bands, basically, because it has not fallen off. And tomorrow candle is coming down below this previous this moving average, then we can say that. Until then we can't. Similarly, BANKNIFTY is still above the moving average or the median of the major bands. But as you see that the distance from the upper and the lower bands are big, that means the volatility can be big. Such candles can be expected. Volatility will be huge, the falls will be big. So would the up moves also be big, as long as the distance between the median and the standard deviation bands of both sides are wide. There's no skews that has happened. There's no contraction of the volatility has happened. Nothing much has happened. It's just that it looks like as of today. Tomorrow it may be different. As of today, it looks like it's a slight pullback from a up move. That's all that it looks as of from the bands. Intraday price action, if you see, it is trending down move until the last 1 hour where it bounced back. Here BANKNIFTY is the same. It is trending down more until the last 1 hour RiskReward. So that's the analysis and support and resistance levels. You can see that we had marked 70,500 to 70,600 as a Fibonacci 23, retracement level, and that's it. That is supports on it. It just it exactly the same place it had come down and then it bounced up. So the first support would be that 500 600 band. If that goes up, then 7300 350 to 400 bands, and if that goes up 7200 to 7300 bands, and then going back to 70,000 levels. Similarly on the upside, resistance would be first retaining the 7800 and 850 that band, and then retaining the 7950 18,000 rounding number, and then after that 18100 18200 18350 400 that level. After that it's all time high. So that's the resistance support zone on the Nifty. BANKNIFTY Right now, it is taken support at 37,800, 37,700 the band, and the resistance supply would be 38,000 usually. And if that is taken out, it can go to 38,500 kind of level. So the resistance next, and then after that, you have 39,100, 39,000 rounding number kind of levels. So downside, you would have a support first that coming at 34,400 Fibonacci 23 if the current support is gone, and then after that you have 37,100, right, that level, and then if that breaks, then you go to 36,700 Fibonacci 38 retracement levels, 36,300 to 36,700 that level. That's bank nifty support and bank resistance levels. Moving to the momentum, we talked about certain divergences yesterday, that is did not work, both of them did not work. We are talking about this divergence, it's a reverse divergence actually, which is bullish in nature. It would have, it was not confirmed, it would have confirmed if it had moved about yesterday's candle, but didn't happen. So that's again that gets nullified, and momentum has now slipped sideways clearly on the short term daily. Bank Nifty also momentum has slipped, which now Bank Nifty, it had not slipped yesterday also, but today it falls. Short term momentum is lost to sideways, lost in the sense lost to sideways from the bullish. That happened today on both the indices. Medium time anyway to sideways, right? For the bank nifty, but nifty also it has slipped to sideways in the medium term. That's what happened today. Divergence got nullified. No divergence, nothing. Monthly there was a divergence that was confirmed and it was moving up, and but it's monthly, so it takes 1 month to confirm, whether it can continue or not, right? But as of now, no other divergences and momentum is in the sideways on the short term. Trend indicators interesting. Trend crossover happened yesterday itself in the Nifty. Trend crossover has not yet happened in the Nifty in the short term daily. Right. So medium term, it is bullish trend for Nifty and the Bank Nifty both indices. So the trend has not changed. The momentum has dipped. Price action is bearish. Taken support. That's how it is. Volatility VIX 17.7, so it is flat today. Nothing happened today. 16.81 is implied volatility, and 58.63 shot up to that as the IVP. So it's flat and it is within the range of 15 and 20, 21. Coming to options analysis, what we see today levels may not be very much relevant because it's a new expiry which would get actively traded from tomorrow, which is 27th January weekly expiry. So today was an expiry day, so this data may not be much relevant, but just for reference, we will quickly go through that. 18,000 is where the maximum MOI put rating is there, 17,000 after that. 18,000 again is where the maximum call rating is there, and 19,000 is after that the highest call rating area. Put coverage is kind of not that bearish, 0.76 in the Nifty, and the short bid in the futures. So that's that. Bank Nifty 38,000 is where the highest put rating. 37,000 also has got good put rating. 38,000 is good highest call rating. 42,000 far away is where the highest call rating after that second. 0.74 is also not bearish, you can't say. Right? Short bid is what happened. The futures up and set. It's not much relevant, but you see that it's playing around in the 18,000 range and 38,000 range for the Nifty and the Bank Nifty for the next expiry as of now. But things could change from each trading day. Openness analysis keeps changing. But as of now, this is it. Yes, bearish day all red. Right? IT is doing really bad because the US Fed issues and the US market is going down. Obviously, IT will fall down. Right? So that's exactly what brought down the market by. And there was also the big weights of Reliance, HDFC, and all that. ICICI continued to be green. That was one of the picks from our side previous day. Airtel is also showing good green due to some fundamental reason, I believe. Some news, probably. Yeah. So sector performance, if you see IT fall down nearly 1.66% further again, continuously it is falling. That's why the market has nothing to support, right? So that's shorter momentum is also bearish, not even sideways, so you'll have to wait for the momentum to catch up. Stay away from it. First of now, metal 0.5, 0.5% close green, the only sector that closed green today. Metal, but the momentum is sideways, so stay away. We're talking about momentum on the short term and daily. Auto 0.5% down, momentum is sideways, slipped to sideways. It was bullish yesterday. Auto was only sector that is bullish yesterday, that is also gone, that is bearish. Basically, all of these sectors are momentum is lost to sideways. So we'll have to wait. Pharma fall 1.5%, FMCG fall 1% down, reality is close flat. So all of the industry sectors are showing bearish signal from the momentum point of view. Institutional participation in today's data is not out, but definitely it would be an equal amount of yesterday's selling that might have happened from the Fyers, right? So yesterday you have seen that 2,700 peak selling restarted from the Fyers side. No? So that's what happens with the US Fed rates and tapering and quantitative easing and bond rate hikes and all this happens. People would rather invest in those instead of stock markets, and money flow can move from stock markets to elsewhere. That could be the fear, that could be the that could be what probably may be happening, never know. Let's hope for some recovery to happen, and we'll keep monitoring those. So that's institutional participation. Today's data is not available. Just let us wait and check later. So dollar index is shooting up, dollar is strengthening, and USD INR currency pair also is kind of strengthening. That means rupee is weakening slightly. Just near the support zone, right? 74.5 kind of levels. Dollar index is gaining strength after it made a dip a few weeks back. Crude oil crazy levels, still 85 plus levels, and another reason for the markets to fall, because it's not good for the economy to have the crude price at 85, 86, 87 kind of levels. So today also it's green crude, that means crude is not stopping, it is rising up. Gold is attempting to break out of the channel top. Let's see what happens. Right, it has at least taken out this 1850 kind of levels and then moved above that, and then we have a resistance out there at 1876 or something, and if that is taken out only, then there is a meaningful move. Momentum is sideways and it just gained some momentum, but whether it would be able to maintain this momentum depends on whether it will be breaking out of this resistance zone of 1876. US market otherwise was very bad. Today also Dow Jones fall 300 and nearly 1%. It looks like we are also falling the same way. So US Nasdaq and S&P 500 is showing some green. Dow Jones is not open yet. So all of these data in the UK markets data, we'll have to check it pre-market tomorrow morning, to make sense out of that, right? Today also is just did not give any clue, right? Because no big move clues are there, but we made big moves. So SGX becomes irrelevant when in such days when big fall happens in the mother market in the US, right? So SGX cannot give any indications, right? No, if I decided to sell, they sell. Actionables too. Nothing in the future sector, nothing to go long on. Neither nothing to solidly go bearish also. It's somewhere in the mid. So I picked up something from non-futures. Like Shwaba is reality sector. It seems to be more in a channel. Good volumes, good trend, and good momentum. Some nice price action on the week, on the daily within a parallel channel. So it could be a swing, or it's not an intraday. It's a swing trade. It can go up to the channel top. So that would be the profit, and then stop would be the alert of entry candle. Reality sector is not falling bad, it's good, and the cyclical nature of reality sector, I keep it bullish, in the coming years. So it can be push and trade also. Shoba Limited. Raymond is having a rounding metal on the weekly, and it is very close to a breakout. So keep that in the watch list. The moment is good and the volumes are extremely good, right? Big, huge volumes. Trend is also bullish. So this is a weekly candle into that, daily also. Watch out for this neckline, and if it is breaking out, you can go for a push or swing trades on Raymond and Shoba. Wrap up mild bearish in the short term. Reasons obviously we already talked about that. It's because of the momentum and trend crossover on the short term. Institutions are selling again, gaining pace in all of this. Global cues, US market, all of this is against the market. So the positive factor that we can talk about is Bank Nifty showing strength. It's not falling big as of last 3 days. It has been falling only half percent. And Nifty took a moving average support and bounced up. So that means there is bias still there. Support is there, and it's good. So that's a wrap up. No mild bearish short term. The last two paragraph is just some cautious note on volatility based option trading. Volatility is within the 10, 15 and 20 range. It's right now I don't know, somewhere near to the top of the range of, if you consider 18 as somewhere higher range. Anything about 20 you have to stay out because it will be too difficult to handle intraday or swings. And if it is since it's on the top, there could be a chance of mean reversion to come down. Potential probability, that's all. Portion sourcing, I think, is be very careful in such days because volatility this is just too much to handle, right? Now, option trading based on that intraday upside and downs, upside both ways. When the big shorts premiums goes up, it can give trading opportunities in option selling and buying both. Right? Either if it is portions that you are carrying forward, always use calendar spreads or vertical spreads to benefit from the risk defined strategies. Right? So that's a wrap up. It's a mild bearish short term view that we have. Rest will have to make it out as the price action goes for the next day if it's intraday. Positionally also you'll have to judge it as per how the price moves in the coming day. But view can be only based on what the charts and indicators shows, right? Even if your mind or fundamental news and all of these may be against or in favor, it doesn't matter. Like what the chart says, we say. The chart says it's mild bearish, and that's my view. So if that helps you to frame your view, then consider hitting the like button and share to your friends and colleagues. Thanks for watching. Happy trading, happy learning. Bye.